For more on the Southwest news and the potential impact on the industry, let's bring in Sheila Kahyaoglu, the aerospace and defense analyst over at Jefferies. Sheila, great to have you with us.
Thanks for having me.
Should we assume to some extent that the other airlines will feel the same sort of slowdown?
Yeah, I think there's no doubt in that. We hosted Love at our conference last week, and, we heard a little bit of hesitation in the CFO's voice in terms of what they were seeing in booking trends. And, it came out today. They expect revenues to be down 15 to 20% in Q3. That compares to down 32% in Q2. And, they're seeing a little bit of hesitation, and that's no surprise given what we're seeing in COVID rates picking up in the U.S., and this is a very U.S. airline. It's 90% U.S. exposed. So I think you're going to see that across the other airlines as well.
Does this necessarily mean that the other airlines that are more exposed to international travel, if there's an even bigger question mark surrounding their projections?
We're a little bit more cautious on what the Delta variant will do. We think you're going to kind of see this level drop out. What we've seen with flight activity is it's down about 60%. And we think you're kind of going to trend at this level because a lot of the next level of pickup into Q3 and Q4 was expected to be corporate. Corporate, for instance, for Love is 35% of revenues. For Delta, it's 50% of revenues. Same thing for United. And so I think that you're going to see, we're going to see flight activity kind of trend at this down 50 to 60% level for the next 2 to 3 quarters until maybe mid-2022, to be quite honest. So you are going to want to pick the airline that we think could outperform. We upgraded Delta recently, and that was actually on the international recovery. We actually think they have a very lucrative potential in the transatlantic routes, given capacity that's been taken off out of that market.
Sheila, it's Tim. Thanks for joining us. We're talking about demand side. We're talking about cost side. We're talking about, obviously, the macro around it. What should we be watching for the next 3 months to know that their businesses are getting together? Because I made a reference. I don't think we actually really trust the guidance we've been getting from the airlines. And I think it was overly upbeat going into the third quarter.
Yeah, I think they set themselves up pretty in a tough spot. They said we're not seeing any impact from the Delta variant. That was mid-July. And as, COVID rates have ticked up. You have to see people cancel bookings and reservations. I mean, we're seeing that anecdotally across the board. We're seeing corporates push back. Jefferies, for instance, we pushed back our reopening a month as an example. So as we see that push out, airlines didn't price that in, but certainly the buy side did. If you look at airlines, they're down about 10% over the last 3 months, while our aerospace coverage and the S&P is up 10%. So they've underperformed by 20%. That's why you saw Love up on this news today, because investors are pricing that in and they're aware of that.
And Sheila, when you think about where investors then can feel safer in terms of the duration of their trade, so getting in now versus waiting to see how the Delta plays out, where in your space are you finding the most opportunity that investors could maybe take advantage of?
We still like these airlines, don't get me wrong. I just think you're going to see, a little bit of a turbulent ride for the next quarter or two. But we really like Delta. We think it's a stock that could potentially double. We think Love is well positioned, but Delta's our preferred airline play. And, our broader aerospace coverage is interesting as well. TransDigm, for instance, put in a bid on Meggitt, a UK commercial aerospace supplier, with a 90% premium today. So that means companies are seeing value in the longer aerospace cycle. So we like Boeing, we like Raytheon Technologies, we like TransDigm, we like Woodward. They're commercial aerospace suppliers, and of course the OEMs.
Sheila, great to have you with us. Thank you.
Thanks.
Sheila Kahyaoglu of Jefferies. Guy Dami, you gave us casinos, but give us your pick in the airlines.
I think meets Delta. Delta against $40. I think that's the best run, probably the best balance sheet. I would say DAL for the airlines. To answer your question without any tomfoolery, Melissa Lee.
Oh, very nice.
Yeah, see that?
Applause for actually doing what you're asked to do, which seems ridiculous. In terms of, though, sort of down the chain, if you will, some of the aerospace companies, Tim, Boeing, for instance, took a test flight in China, 737 MAX.
Yeah, look, I think the Boeing story, as we know, has been highly correlated to order books and what we're seeing out of the demand from the airlines. I like what we got out of their defense sector. I like what we're getting out of where I think they stand with regulators. I think the bottom line for this company is we need to start seeing free cash flow. I think, look, you're at 12 to 18 month, I think, recovery period. And again, we're looking out to 23 on airlines. That's where you are with Boeing. But yes, I'm long Boeing, and I think the worst is behind it.
Nadine?
You know, I'm sticking away from this industry right now. I don't mind defense. We have a position in Thales, which is over across the pond. But for me, the duration's the hard time. I think you got to wait a little bit on these before you enter.